Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to share with you guys 10 different companies super investors are buying, basically the bought recently. So Q3 is just finished. So Q3, what were they buying? I'm going to share with you guys. I'm going to tell you how many basically what they bought and how many basically super investors bought that specific stock. So we're going to start, I think the highest that I've gotten this basically is some companies being bought by 9 different super investors, and then it kind of goes down all the way to I think it was 3 or 4. So yeah, I'm going to share with you guys. It's just a bit of entertainment. I don't want to copy them. Of course, you should never copy anybody. You have to basically stick with your investment goals and all of that stuff, and always be careful and be mindful. By the time they report to us, by the time they actually inform the SEC, for example, they might have already sold that stock. So you have to always be careful with that. So what I'm going to do now is I'm going to share with you guys the 10 companies straight away. So we're going to start. So as usual, we got the same more or less information here. On the first company, we're looking at a Visa today. I'm going to kind of summarize some of the companies. We're not going to basically go through every single thing. So as you can see here, the number here represents number of investors that bought that stock during Q3. So there were 9 different basically super investors that were buying this company. Basically this company, it has a market cap right now 611 billion. This is one of the companies that I have owned in my portfolio quite some time. It has a wide economic moat. They have excellent dividend payment, and as you can see here, profit margin, return on equity, return on investor capital is probably one of the best out there. And when it comes to return on free cash flow, we've got about $18.6 billion of free cash flow. Now, companies that have excellent free cash flow are very important to us because they can buy back their own shares. They pay off any debt the company has. They can acquire other businesses, of course, as well as paying dividends and so on. So it is important these companies generate, excellent free cash flow. And then total return the last 10 years, basically it's about 18% per annum. The revenue growth for this company for next year is 10%, and EPS is basically 13%. So double-digit growth when it comes to EPS as well as revenue. Right now, it's basically 15% premium right now, $272 per share is where they think the price should be. Right now is $315. The next one we're looking at is Apple. You might be thinking, why is Apple on this list? Apple is still Sharia compliant company. When I sold this company long time ago, one of the things that I was not happy with is the credit card side of things. That didn't go anywhere. Basically, it was kind of on the news and so on. And the fact that basically Apple Pay and all of that is going to be interesting, all of that. None of that has happened yet. Maybe they will happen sooner or later, whatever. But there were 6 different. It's still Sharia compliant, and there were 6 different super investors buying this company in the last quarter in Q3. Market cap right now is 3.55 trillion company. I think in between Nvidia, Microsoft, and this company, they're around those $3 trillion when it comes to their market cap. But currently, it basically is trading $234 per share. And it's about 200 basically the fair value for this company according to Morningstar, which makes about 18% basically expensive right now, premium right now. Check this out, $108 billion of free cash flow, which is absolutely ridiculous, and 23% total return the last 10 years. And they're expecting the revenue to grow about 8%, EPS to grow about 12% next year, which is absolutely amazing. So this is probably one of the best companies out there, and it's going to be, look at every single one of us has got one of their devices sitting at home. Okay, so I wouldn't be surprised if this company hits another $2-3 trillion by the next 5 years or so. Now, the next one we're looking at today is Nike, and there were 5 super investors buying this company, 115 billion market cap. It has a wide economic moat, and as you can see, the current price is $78 per share. Dividend yield of 2%. The payout ratio is 40%, and the 5-year growth rate of 11%. 11 years of increase in that dividend, you get $1.60 for every share of this company that you own, and dividend safe to of B right now. Profit margin, we're looking at profit margin, return to equity, and return on investor capital, really good. And when it comes to free cash flow, we're looking at 7.2 $2 billion of free cash flow right now. Total return in the last 10 years, we're looking at about 6%. And growth estimate next year in terms of revenue is 5%. EPS is about 14%. So not bad with the new CEO and everything else that's happening. I wouldn't be surprised if the company bounces back. But right now, it's 34% discounted right now. $117 per share is where they think the price should be. Right now, it's $78 per share. So it will be interesting to see where this company ends up in the next basically couple, next maybe quarter or so. There's a lot of bad news out there for this company and so on, but we will see. They might do a quick turnaround. And you know, like what Warren Buffett always talks about basically, and Warren Buffett as well as the Peter Lynch, they always talk about these type of companies that everyone else hates them at the moment, and they basically they become a very good turnaround kind of story later on. So, but like company, for example, like Intel, I wouldn't say that might work in maybe another 4 or 5 years, but because in the tech world it is quite competitive, it's quite difficult. But this company, I think they're probably one of the best out there when it comes to the type of products that they sell. So I think they will bounce back sooner or later, but we will see. Anyway, the next company we're looking at today is Mastercard. As you can see, there were 5 super investors buying the company, 485 billion market cap. It has a wide economic moat, $531 per share right now. Dividend yield very low, but as you can see here, this about 15% 5-year growth rate of 15%, which is absolutely amazing. It's A+ when it comes to the dividend safety. Profit margin, return on equity, return on invested capital, really good. Free cash flow, $12.8 billion of free cash flow, which is excellent free cash flow there. Total return the last 10 years, we're looking at about 20%. They're expecting the earnings to grow about 12% and then EPS to grow about 13%. 14% premium right now. $465 per share is where they think the price should be. As you can see right now, it's $531. So it's still a bit expensive. These two companies more or less kind of copy each other when it comes to in terms of growth side of things, in terms of whenever they are fairly valued, they always kind of fairly valued together. When they're undervalued, they're also similar. Next one we're looking at today is Sherwin-Williams. This is basically similar to PPG. Is one of those painting companies. It's been on my watch list for a very long time, but there's a reason why I haven't actually bought it, because of this. It has been trading basically, it's been expensive for a very long time. 64% premium right now, $242 per share is where they think the price should be. Right now we're looking at about closer to $400 per share. And the market cap 99 billion right now. But when it comes to dividend, excellent dividend freak, basically the EPS, the 5-year growth rate, you can see 14%, 46 years of increase in that dividend. So another 4 years, they will become a dividend king. The A+ when it comes to the dividend safety side of things. And when it comes to profit margin, return on equity, and return on invested capital, as you can see, absolutely amazing, nothing to worry about. And free cash flow of $2 billion, which is slightly lower than, of course, it's slightly low in comparison to where the market cap is. So it's not a small cap. I would expect at least a 5 or more in terms of, $5 billion or more from this type of company. But total return in the last 10 years, we're looking at about 18%. The revenue side of things, growth side of things, next year 5%, 13% basically when it comes to the EPS side of things. So yeah, another great company there. Next one is Uber. Uber is one of the companies I'm currently looking at. Inshallah, I'm doing a little bit of research. I'll share that with you guys as soon as I have it ready. There were 4 different super investors that were buying this stock. 150 billion market cap right now, a narrow economic moat, $72 per share right now. No dividends, of course, yet. Profit margin, return on equity, return on invested capital is actually decent. 5.9, almost a $6 billion of free cash flow right now. And total return in the last 5 years, okay, only 5 years, is about basically 20%. Next year, they're expecting the earnings to grow, the revenue to grow about 16%, and the EPS to grow about 26%. So there is really basically heading in the right direction. This company fairly valued according to Morningstar, which is interesting. So $80 per share right now. We're looking at about 72 when it comes to current price. So we will see. I'm going to do a quick research and I'll share with you guys with that. Next one is Adobe. There were 4 different basically super investors buying this company. As you can see, it has a huge market cap of $231 billion. No, of course, a free cap, but no dividend yield yet, or dividends I'm assuming in the next few years they will probably start, considering other companies very similar sort of industries, like companies like Metas and Google or Alphabet, whatever, have started. Even CRM or Salesforce have started. So I would assume in the next few years, because they have been free cash flow positive for a very, very long time, very profitable business. So I would assume in the next few years they'll probably start paying dividends. And although dividends don't really matter, as long as they're using that money to reinvest in the business and grow more, generate more revenue, that's all we really care. Total return the last 10 years, we're looking about closer to 22% right now. The revenue expectations for next year is about 11%. EPS, we're expecting about 13%. So huge double digits, which is really nice. 17% discounted right now. 608, basically $35 per share is where they think the price should be. Right now is only about 500. So 17% discounted right now, which is interesting. The next one is Copart. This is a company that I've actually mentioned quite a lot. I think last time I spoke about this company was a little bit expensive. They do kind of online auctions for cars and stuff. So yeah, based in the US and Canada and so on. The number of buys were 3 from super investors. 61 billion market cap right now. Wide economic mode, $63 per share. No dividends as of yet. And when it comes to the profit margin, return equity, return investor capital, absolutely amazing. Closer to $1 billion of free cash flow right now. But again, it's a little bit disappointed with that, because 61 billion market cap, or less than $1 billion market basically when it comes to free cash flow. A little bit questionable, but that's fine. Total return the last 10, as long as the positive is good. Last 10 years, we're looking about total return of 30%, which is really huge. Growth estimate for the revenue side of it is 9% next year. EPS about 13%, and fairly value right now, $57 per share is where they think the price should be. So it is heading towards that expensive side of things. So we'll see what happens in the next few weeks. And the next one is a Broadcom, is another one that I own in my portfolio. There were 3 different super investors buying this company. 769 billion market cap, wide economic mode. As you know, it does have excellent dividends, A- when it comes to dividend safety. Profit margin, return equity, return investor capital is decent. $18 billion of free cash flow. Total return the last 10 years, we're looking at about 34%. And growth estimate for next year, we're looking at about 17%. And when it comes to revenue side of things, EPS, we're looking at about 28%. And Morningstar is saying it's fairly value right now, $155 per share is where they think the price should be. Right now is only $157 per share. And the final one is Air Products and Chemicals. Again, another 3 investors who are looking at this one. I'm a little bit disappointed with this one, because they still have, of course, a negative free cash flow. So we will see how that changes. Like I said to you guys, I'm going to wait until to 2025 and see where that is basically heading. But when it comes to this dividend safety side of things, is A rated, so which is absolutely fine. 41 years of increasing that dividend. Return on profit margin, return on equity, return on investor capital is absolutely fine. Total return the last 10 years, we're looking at about 11%. They're expecting the earnings to the EPS to grow about 8%, and then the revenue to grow about EPS to grow about 10%, and revenue to grow about 8%. Fairly valued as well. $322 per share is where they think the price should be. So that's the 10 companies that I wanted to share with you guys. These super investors are buying these companies probably maybe around the time where they were buying, maybe they were a little bit discounted. So by the time they disclose that information, they've gone up quite a bit. So you never know. So just do your own research and find out a bit more information about the companies, and do your, of course, discounted cash flow models or whatever you use. And in terms of the Sharia compliance side of things, is you can pause the video and have a look at this as well. Now, I've mentioned there are 2 companies, so a couple of companies I own. Visa, I do own Microsoft, and basically Broadcom, as well as Air Products and Chemicals. I do own Adobe as well in the another family portfolio. I've shared that with the community. If you haven't joined us in the Patreon account, you get access to a few things that are basically there, so you can basically get hold of that, including the Discord. InshaAllah, join us on that side of things. So the companies that I own, that I've just talked about in the portfolio, that are basically Air Products and Chemicals. I do own, let's see, Mastercard, Visa. Those are the 3 that I've mentioned that basically are included on that list today. Anyway, have a wonderful day. Assalamu Alaikum.